Hello everyone, did you know that you could invest in real estate with as low as $1? Today we're speaking about REITs and the top 5 that you should absolutely own. But if you're new here, my name's Alexi and on this channel I'll make videos about personal finance and investing, and if you're interested into these topics, let me know by clicking the like down below so that I know these videos are helpful to you. Also, don't forget to check the description down below where you can see all the timestamps. If you want to go to a specific part of the video, you can just go down below. So what is a REIT? A REIT is a real estate investment trust. Does that help you? No. A real estate investment trust is pretty much a company that doesn't have any products or services, but what they do is that they invest in properties. And the way these companies make money is either by renting the places and collecting rents each month, or sometimes what they do is that they buy a house or property, whatever, and they flip it at a higher valuation so that they make profit at the end of the day. There are a few really known REITs. For example, there's the Realty Income one that we'll speak later about in this video. There's also Welltower and Equinix, for example. But don't worry about that, we'll speak about later on in the video the top 5 that you should buy and the top 5 that I recommend buying. I do own some REITs in my portfolio. I actually have 2 holdings that are REITs, which is Realty Income and Store Capital. These are 2 stocks that I own that are REITs. I'm up quite a bit when it comes to Store Capital, and with Realty Income I'm pretty much breaking even, a little bit of profit on it, but what I'm doing is that I'm collecting all the monthly dividends that they pay. Because yes, Realty Income is a stock that pays monthly dividend, which is absolutely awesome, so we'll speak about this later in the video, but just wait for a second. So now, speaking about REITs, what are the benefits of investing into them? So you can have an idea of how it is if you want to do it yourself. The first really big advantage of REITs is that you can invest into the real estate world without having like a ton of money. As I said in the intro of this video, you can actually start investing in REITs with just $1. And this is really cool because if you want to diversify your portfolio in a lot of different types of companies, REITs is a really specific one, a really strange one I would even say, in the stock market, and investing into them is really interesting. The second big advantage that I found when it comes to REIT is that when you invest into them, you don't have to do all the work that you would have to do if you invested in real estate otherwise. Because since you are not really the owner of the properties, you don't have to take care of the tenants, you don't have to take care of the budgets, you don't have to take care of like bills and stuff like this, or anything else. This is the work of the company that you invested in, so you are really in a position where you don't have to do much except investing into a company that is doing all the work for you. So you can see already with the 2 first advantages of investing into REITs that it's really interesting to do so. But wait, I got even more with the third advantage of investing into REITs. They are legally obligated to pay 90% of their profits back to shareholders in a form of dividends. First of all, if you don't know what a dividend is, I got a lot of videos about this on my channel, but pretty much what it is, it's a payment from the company when they make profit and they have enough money for them and they have a surplus of money, they just will give all this back to shareholders in form of cash payments that we call dividend. And with REITs, they are paying back dividend at 90% of their profit. It's almost all the money that they make, they give it back to you in forms of dividend, which is awesome. Now, because of this, with the fourth advantage, you're getting some pretty high dividend yield. And if you aim for passive income by investing into the stock market, investing into REITs is really interesting because you get these juicy dividends that can be really high. And the last advantage that I would say about REITs is that you can buy and sell at any point. When, for example, if you had a property, when you invested into real estate in a property, well, you can't sell it whenever you want. You can't buy a new one whenever you want. It's a lot of money, a lot of time, a lot of efforts. And well, when you invest into a REIT, you pretty much don't have to do all this job. You can sell and buy whatever you want because it's a stock on the stock market. Now, this is great and all, but as always, we're gonna speak about the downsides right now. What are the downsides of REITs? Well, the first one is that REITs are legally obligated to pay 90% of their profits back to shareholders in forms of dividend. And you might be like, oh, he's an idiot, he already used these arguments when it comes to the benefits. And you are right, I already used these arguments when it comes to the benefits, but it's also a downside, of course. If you pay 90% of the profits back to shareholders, you don't have that much money to reinvest into your business. So the big problem with that is that they only have 10% of the profits that they can reinvest into their company to buy new properties and to do all that stuff to make more money. So it's a benefit and a downside. It really depends on how you want to look at it. If you look at it for the dividends, well, it's great. But if you look at it for the stock price valuation, it might not move as much as other stocks because they don't make that much money for them. The second downside of REITs is, of course, that the dividend is really volatile. Yes, you'll get passive income with it, but you never exactly know how much you're gonna make because Let's say that the REITs make more money this month, well, they're gonna pay you a higher dividend. When they make less money, they're gonna pay you a lower dividend. And it all depends on the performance of the REIT itself. So if you don't mind having really volatile dividends, investing into REITs is not a problem for you. But if you want a really stable passive income flow coming back to you every single 4 months or so, then it's gonna be a little bit tricky to invest into REITs. And now the third downside when it comes to REITs is that the dividend that you're getting paid is taxed as ordinary income. Which means that if you compare the dividend of a REIT to a dividend of another company that is not a REIT, you'll have to pay higher taxes on this dividend. Because since REITs are paying so much money when it comes to dividends, the governments are not okay with you taking all that for you. So you're gonna have to pay a higher taxes on these. So the fact that they pay higher dividend is also a downside because you have to pay higher taxes on them. Okay, so I believe these were all the benefits and all the downsides of REITs in my opinion. If you have new ones, let me know in the comments down below so that everybody else can know about them. Okay, now that this is out of the way, let's go into the top 5 REITs that you need to own. Quick reminder out here is that you can find all of these stocks on Trading212 for the people that are using Trading212, and you can also find these on most other brokers. Let's go with number 1, which is Realty Income. Of course, I already spoke about Realty Income at the beginning of this video, but let's go through it. The first cool thing about Realty Income is that they pay a 4.4 dividend, which is pretty high. For a REIT, it's not the biggest one, but you should never buy a REIT because they have a high dividend yield. That doesn't mean the company is great. That doesn't mean they will not cut the dividend in the future. So try to aim for a dividend that is not too high, but also not too low if you want to still get some passive income. So as I said, Realty Income is a 4.4% dividend yield, which is pretty great. It's a pretty old company. I mean, they've been operating for about 50 years, a little bit more than 50 years, I believe, which makes them a really safe company because they know what they do. They've been doing it for super long and they make great money. They own about 6,500 properties, and you can find in them big names like, for example, Walmart. I think there's also Dollar General, LA Fitness, and CVS Pharmacy, if I remember correctly. So you can see that they own the properties in which these huge companies are actually going into and selling their products, which makes it great because Realty Income is a pretty safe stock if you think about it. If you own the properties in which Walmart are selling their stuff, you are safe. If you own the properties in which CVS Pharmacy is selling their stuff, you are actually really safe too. So you can see that the cool thing about them is that they own all these properties that have big names into them, that already have like an established business. They will not go bankrupt except if there's like a huge scandal about them. And yeah, I believe that Realty Income is a really interesting company to invest in. Also, great thing is that, as I said at the beginning of this video, they pay a monthly dividend, which makes them one of the rarest stock ever because you can't really find monthly dividend payer stocks in this stock market. And this is great, for example, if you want to reinvest the dividend. Well, you don't have to wait every 4 months to do so. You can do it every single month, which makes it a little bit more effective, but not that great of a difference. But if you want passive income every single month, this is a great stock to invest in. Second on the list, and it's Ventas. I used to have money invested into Ventas a few months back, and I made some great money with them. What they do is that they are a healthcare REIT, and actually one of the leaders when it comes to this. They have, as Realty Income, a pretty stable dividend of about 4%, which is also great. They own a lot of senior homes, which is really interesting because if you think about it, senior homes are here to stay. In the future, people are getting older, as well as right now, and as well as in the past. So this is a sector that is growing, that has a lot of demands, and that's really interesting to invest in right now. They also own some offices and healthcare buildings in general, which makes them an even more diversified stocks, which is really interesting. And as I said before, the demand of this kind of sector is growing a lot and will grow for the rest of humanity pretty much. And I would say that if you want to invest into Ventas, it's a great stock to own. Now let's go to the third one, which is one of my holding, and it's Store Capital. Store Capital is a special one, I would say, because they don't focus on big companies like Walmart and CVS Pharmacy like we spoke before with Realty Income, but what they do is that they specialize when it comes to single tenants, which is great because it means that the tenants are responsible for all additional costs when it comes to the building or the property. So they own pretty small businesses, but they have 2,500 buildings that they own. So of course, if you own some smaller businesses, you are taking a little bit more risk because these ones are not as safe as Realty Income, for example. But what makes it great is that with the pandemic, they've been hit pretty hard, just like pretty much any REIT. and they still haven't recovered completely yet. But I would say that even if it's a little bit more risky than investing into like realty income, you have more potential in the future because these small businesses can grow like crazy, not like the big ones. Like Walmart cannot double in size every single year, but the small businesses can, and they can actually do more contracts with store capital and they will make more money at the end of the day. So it's a growing company that is making lots of money and that will grow amazing in the future, I believe. So that's why I'm investing into them, and also in realty income. These are the two stocks that I own. And yeah, I believe Store Capital is a great stock to own. Fourth on the list, and this one is really similar when it comes to the kind of sector they invested in as Ventas, because it's Welltower and they are also into the healthcare sector. And just like Ventas also, they take care of seniors mostly, but they do some other things, but mostly senior homes. Also, I forgot to mention with Store Capital, they still pay a dividend of about 4.4%, which is great. It's just like realty income with a little bit more risk also, but that's a great thing to have. Now, let's go back to Welltower. They pay a 3.7% dividend yield, which is great, a little bit lower than the other ones, but it also means that it's a safer dividend. And yeah, I believe this company for long-term investing is great because they're already well established. And yeah, they're one of the leaders when it comes to healthcare sector and senior homes. So I will not see them fail in the future. It's a big company, actually one of the biggest in the world when it comes to REITs. And yeah, investing into them for the long term is an amazing choice that you can make. If you're here for the long term, Welltower is a REIT for you. And last one on the list, I wanted to do something a little bit different for the last one. So we're gonna speak about an ETF. If you've never heard of ETFs, go and check out this video right here that I made that will explain you what an ETF is and which one are the most interesting one to buy. And the one that we're gonna speak about is the Charles Schwab. It's so hard to pronounce, but let's say Schwab US REITs ETF. So this ETF regroups many REITs into just one holding, which is like the role of an ETF pretty much. And what's great about it is that it's really safer to invest into an ETF than investing into an individual company. So if you're a little bit scared about these REITs, you don't want to invest into one because you're scared it will drop tomorrow or something like that, just invest into an ETF. Way safer, more stable, they will pay the dividend for pretty much any time, I believe. And yeah, it's a really interesting one. They have a really low expense ratio of about 0.07% per year, so you only have to pay as a fee 0.07% of the money you invested into them. So you're most likely gonna make a lot of money by buying this ETF. They exist since 2011 if I'm not mistaken, and it's a really great way to have a more general approach to REITs than investing into just one company. You can just invest into this ETF and make safer money, maybe a little bit less money than if you invested into a riskier stock, but you still make great money. And I will suggest buying this if you're here for the long term, you want to have a really safe investment and a well diversified one. Now, if you want to know more about how to pick your first stocks, go and check out this video right here. And if you're interested into these subjects, go and watch this video about how to start investing right now. If you like this video, let me know by commenting down below that you did like it. Like this video, subscribe to the channel, and I'll see you guys in the next one. Bye bye.